Welcome back to another episode of the Market Outlook series. I'm eagerly waiting, but last 2 weeks I was not able to record or do a live session because I was undergoing some medical procedures and I was in recovery. I'm feeling a lot better now. So I decided let's resume the live sessions after 2 weeks break. I see a lot has changed in the markets. So we will get into the discussion. We'll start off with a broad market. We'll start off with Nifty, and then we'll move into the analysis of key sector indices and see where the momentum is headed. So let's share my screen and get started with the discussion. So last discussion that we had was on September 29. Now today is October 18. And on that note, I would also like to wish all of you a very, very happy Dhanteras. It's a very auspicious day for all business people, for everybody in general. And for me, I feel it's a very nice day. To get back into doing my live sessions, which has been a great way to interact with all of you after this brief health related downturn that I've experienced. So we'll start off with the auto sector. Now, no, we'll start off with Nifty as we said first. So here's the chart of Nifty. Very interesting chart. Now, there is this level of 24,500, which has held support, which has held strong very well. There were a couple of breaches, but looks like these breaches didn't have much sustenance in them. If you look at the chart of Nifty, so I think that I'm going to change my ranges here. So this little trepidation above the level of 60 was actually the index going slightly overbought, and after that, this indicated the end of the correctionary period. Then the index took another little brief correction down to the immediate support level of 24,500 and now has turned absolutely bullish. The volume activity also is very supportive of the uptrend, and I believe this uptrend is going to last. If not a year, at least the next 6 months. I am definitely expecting new all-time high in the index. So if you've been on the sidelines now, or if you're worrying about investing in precious metals or missing the rally that unfolded in precious metals, I am going to tell you two things. Number one, don't go into precious metals anymore because negative divergences have started developing over there. And now it has reached a stage of euphoria with it making major headlines. So don't let your fear of missing out uh, push you into making wrong decisions. Don't participate in precious metals anymore. Don't buy gold anymore. But with respect to Nifty, I can see that this has given a breakout above this high and this high and this high. So now it is expected to unfold into a fresh new rally. So the immediate resistance now is 26,300. So if you've been on the sideline in the market so far, now is a very good time for you to get active and start trading or investing in the market already. Okay. So you're going to start seeing positive weekly and monthly returns from Nifty. I know the last 1 year Nifty has not done much, but now the next year that is to come is going to be extremely different. So don't miss out on that rally at all. Do your own analysis if you can and trade. If you can't do your own analysis, if you want ready to execute trade setups, then you can also enroll for my short term or long term plan, whatever is your preference, or even both using the EXP Pro bundle. Now here, as we can see, 26,300 is the resistance. Technically, if we speak, look at the price and the volume. So this volume upside over here has unfolded. This had unfolded pretty much against this entire downturn. Okay. But here you can see that this upside, this break above the key resistance of 25,600, this has also happened against good volumes. And this volume pickup was not that significant. Basically, this over here, you can see this rally, right? So this rally happened on pretty dry volumes, and this was an indication that we can expect another sharp downturn to the support level. And then this rally over here, it started unfolding without much volume, but once we crossed above the 25,000 resistance, then the volume pickup really started here. And now we've also crossed above this previous high. And this indicates basically that this first uptrend that was formed, this was the second wave of downside to it. And now a fresh wave of upside has started. So this is what the daily says. If we take a step back and if we look at the weekly time frame, see overall the weekly time frame has been very bullish throughout. There was no point where the weekly time frame turned bearish. It did go into correction, but it bounced. The RSI 25 period bounced from the level of 40, which indicates that underlying bull trend has been intact. So weekly is bullish, daily is bullish with good volumes, with RSI showing positive range. What is the 75-minute time frame saying? On the 75-minute time frame, I noticed that in the very previous cycle, like this entire cycle, the 75-minute touched the overbought and the oversold zone at the like in the same structure, in the same cycle. This is very indicative of shift in one higher time frame. So since this extreme movement has happened on 75-minute time frame on Nifty's chart, it basically means that the higher time frame, that is the daily time frame, is undergoing a trend shift. So daily time frame we can see has established a bull trend after correctionary period, and it has also established a higher high on 75-minute time frame also. If you see carefully, you will see the higher high and higher low structure has been formed and it's continuing, right? So I think the market is prim and proper for fresh new rally, and this is just the beginning. Typically, a very good thing to do in the market is to take inspiration from the past. And in the past, also, you can see that right before this rally started, there was an extreme move on the 75-minute time frame where in the same cycle, the overbought and oversold sold was touched, and then a strong rally started. So over here, we can see a higher high was breached above this level. The market went up to the next resistance, gave a little pullback to the 20 EMA or the previous support, and then continued to rally upwards. So here also what I expect is that since this higher high has been breached, market will continue rally up to 26,300, come back, give a little bit of pullback to 25,600 and head upwards again. Now that we have established that the broad market is very bullish, let's head towards our indices and see where we have opportunities. So this is the auto sector. Let's look at the daily time frame, extremely bullish. And I think this little dip is a nice little buying opportunity, and it is actually still there. So on the 75-minute time frame, so before I took a health leave from doing live sessions, we had noticed that there was this negative divergence, and I had said that wait for the auto sector to come back to the 20 EMA. We also set this little alert here. And you can see the 20 EMA has acted as wonderful support. And the auto sector started to turn up again. So I think there are really good buy on dip opportunity in the auto sector. So we'll continue to keep the auto sector in the bullish segment. Next, we have private banks. So I think private banking sector is doing great. We had set an alert when we did the last market outlook at the level of 27,200, and we had discussed that if this high gets breached, then we can expect a rally. The rally has unfolded. Personally, I don't trade very actively in the private banking sector because they are mega cap stocks, and they typically, for them, even moving 5-10% is like a really really big deal. I prefer to do a little bit more uh, I prefer to swing trade in more stocks with more delta basically. So for me, this is not a sector that I actively trade in or give recommendations in, but on a sector specific level, it is definitely very bullish, and I would expect the bullishness to continue. However, for swing trading particularly, this is not a sector that I would turn to this is a good sector for long term, very safe buy and hold. Bank Nifty also is looking bullish, and this is just the beginning of the fresh new bull trend. And we expect that the prices will continue. I did expect that it would come down to the 250 EMA, but it did not do that. It sort of just retested this previous high over here and bounced back from there itself. And now it seems like it is headed towards a new high above here. So let's see if we can draw some trend lines and get some insights on where maybe the resistance might lie. Sometimes channels give us a very good indication of potential target levels for indices, for stocks, and so on. So if you can see this trend line that I have drawn most recently, um, is where we can expect the broad market, the bank nifty to basically face resistance. So I'm going to draw a small extended line over here. I think 60,300 is the level where we should expect some resistance to come in the bank nifty. So this, with that, we are basically looking at a upside of around 4.5% from current prices, considering the beautiful rally that is unfolded. However, this seems like something that actually bothers me, that this downside activity has actually happened with a little bit of volume pickup. Sorry, just hold on. So with Bank Nifty, I am a little concerned that this entire rally does not show a lot of price pickup. As you can see on my histogram calculations, comparing the 50-day versus, sorry, the 20-day versus the 100-day average volumes. But this decline did have volume pickup. So I am a little weary of this, and I will set an alert here just so I know that a daily time frame lower low has been established if it should turn around. And let's look at the 75-minute also. And again, on the 75-minute time frame, it does seem to have solid activity. So I would like to know if the 75-minute time frame comes back to the level of 40 over here. Now, this has been established as the previous high. So I would expect a small correction back to basically the 20 EMA, you can say. And maybe there we'll observe if, you know, uh, opportunities for entry exist. CNX Finance has been posting fabulous rally, very strong rally. Stocks like Muthoot Finance are going bonkers. And I do expect the rally to continue. However, for a fresh entry, right now I am not attempting fresh entries immediately because I think it's been a little stretched out. I am waiting for the sector to cool down a little bit and then maybe take fresh positions. I do have some existing positions, but I've started to book profits somewhat in finance sector. Now, PSU Bank also is showing fabulous rally. So we had calls in stocks like South Bank, in RBL Bank, uh, uh, and those recommendations are doing so well for the short-term plan members. And those stock recommendations were given before this massive rally started off. So we've been holding those stocks since quite a while now. Uh, and I think this is just the beginning of a nice new uptrend in the public sector banks. And I think there is so much more potential because it has just touched, the index has just touched the all-time highs territory. And I think it has so much upside to capture. So PSU is definitely something that should be part of the portfolio. Even in the long-term plan that I have available for subscription, even there we have some public sector banks which honestly have more than 100% target because that is the kind of rally that I think the sector is going to showcase. So we will continue to keep this bullish as well. Defense, Indian retailers' favorite sector probably at this point. So I think defense sector is also coming out of a correctionary zone, and I believe here it has already established a nice little higher high, given a pullback, taken support at the 100 EMA or the previous high. So this is a very nice double support, and I think it is ready for rally. So look out for stocks like Cochin Shipyard, HAL. So I think there are lots of opportunities there. Uh, and just be prudent. Don't over allocate to the sector, because at the end of the day, as much money as it can make for you, it is also a risky sector. So don't over allocate. Use a proper methodology for um, allocating. I prefer to use a twofold approach. Number one, I look at the sector that the stock belongs to, and then how much absolute risk that I am going to take on each position, and then I adjust my allocation accordingly. So I have a model ready for that. I teach that in my advanced swing trade training program for those who are interested or serious about becoming good swing traders. So defense also continues to look really bullish. Metals sector. So metal sector over here, I did have this alert. It is very close to its all-time highs. It has given this rally, but I would like to see the metal sector establish a long all-time high and sustain it, because that typically is when a solid, reliable trend starts in the metal sector. So I will be looking out for a sustained breakout, because see, it has broken above the all-time high, but it's sort of started consolidating over there. So I'm a bit weary. What I do like is that the daily time frame is now starting to go overbought, right? So over here also, if you see, it went overbought, but it gave a nice little pullback and then continued upward. So I think I will wait for the metal sectors to give me a pullback. 75-minute time frame is looking bearish, but overall it does look like it has potential for bullishness. So we'll continue to keep the metal sector bullish. Now, all the sectors that we discussed 2 weeks ago that looked bullish have given really good rallies in the last 2 weeks that I was away. And now we will enter into the segment of stocks or sectors which I thought had potential, but hadn't really given some confirmation. So we'll start off with the infra sector. Now, with respect to the infra sector, I noticed there was a massive negative divergence, something that, back in September 24, I was warning you, don't invest in infrastructure sector anymore. It's out of steam. And then it went into massive correction. But here again, on the daily time frame, it has not established a higher high yet. Speaking of the RSI, on the RSI front, it did give a positive divergence, a mild positive divergence here. And I like the fact that here it has sustained above the level of 60 a little bit, which kind of tells me that it's ready to go overboard, it's ready to turn positive. And I also like the fact that it at the pullback, it sustained the support from the 100 EMA. So I think the infra sector is definitely giving us bullish signals. And on 75-minute time frame, the RSI is definitely looking more bullish. But I want to wait in the infra sector, because infra sector is very good for swing trading. I want to wait for a healthy pullback, which I think can up, come around 90 to 100. And when that happens, that is, I think, where we should kind of eye the sector for potential entry in stocks. Obviously, the analysis will have to come on stock specific basis. You cannot take an envelope call on stocks in a particular sector based on sector or an index analysis. It's not a good idea to ever do that. So what I want to do is I want to move infra into bullish from potential, because it has given us nice confirmations by way of establishing higher high, higher low structure on 75-minute time frame, establishing overbought, taking support on the level of 40, RSI taking support at 40, daily also going overbought and not breaking the level of 40 upon correction, taking support at the level of 100 EMA. So all these things, all in all, are really good. Let's look at reality. What is reality saying? So reality also, after this little bit of correctionary phase, big negative divergence all this way here, It was negative up to this point, and then here it went overbought. It also established a higher high. So we had observed this. Uh, and then this pullback that it gave, basically, it gave this pullback. It broke the 250 EMA, but it did take support at the level of 40, which I like. And now it has overcome the key resistance, EMA resistances. The 75-minute time frame has turned overbought after the formation of a very nice positive divergence. I like all of these things. So I think the realty sector is also ready to turn bullish, and I think it is immediately looking pretty attractive. If it gives us any pullback at all to either this low, right, or even the 20 EMA, I think that's great opportunity for us to make fresh positions. So I would say the realty sector is also pretty bullish. Consumption sector has given a fabulous rally the last 2 weeks. The underlying trend is definitely bullish out here, and the uptrend is expected to continue. The consumption sector is expected to be the outperformer for the year to come, because as the consumption theme really catches momentum or continues to unfold into strong momentum in the Indian economic scenario. Oil and gas. So oil and gas does not look as strong as I wanted to. So I think I'm going to continue to keep it in potential, and CNX consumption will definitely move to bullish. What about FMCG? FMCG is displaying positive range on the weekly time frame. On the daily time frame, it has established a small overbought back here and then given a pullback. And I think over here it has established this double bottom, which is positive news. And I believe now that it's ready to go bullish and it's ready to rally. However, FMCG is not going to be my top pick. In fact, it's going to be one of the uh, last options for me, because again, mega large cap stocks, they move really slow, and I prefer stocks with a little bit more beta in them. So Nifty Capital Market Index, it has established a higher high, the much weighted higher high, and I think it is also ready to unleash into a new rally. Uh, and the good thing about the capital market index is that it's a super trending index, which means that once it establishes a trend, it stays in that trend for a long time. It becomes a swing trader only when it goes into correction, but when it's unfolding into a bullish momentum, it acts like a super trender, which means it can establish strong, long lasting rallies. So we definitely want to move the auto sector, sorry, the capital market sector really, really high up in the bullish sector list. Uh, and if it gives us a pullback opportunity for entry, I think that will be golden. But definitely, we want to look at stocks in this sector. Now, consumer durables, let's look at pharma. So, pharma is not looking that hot. It is trying to turn bullish, but I think other sectors are looking kind of a lot better than pharma at this stage. So, I'm going to not entertain pharma as much. Consumer durables also, I think other sectoral charts are looking really good, because over here you can see it's resisting the level of 60 on the daily time frame. Though it is definitely establishing the higher high, higher low structure, but I think it's just very risky trade at this point. I do want more strength in the price structure before I start participating. Healthcare also, no proper higher high, higher low structure. RSI is showing weak positive range, so ignore. Just like oil and gas, energy is also not looking very positive, so we'll move on. Media sector, I don't trust. I think it's very volatile, very high risk. We don't want to participate there. PSC sector is I would like it to first go overbought and break above my key resistance zone. So again, steer clear for now. Commodity is showing potential, but not my first pick. I will definitely move commodity sector to the potential segment. IT continues to look bearish, but it seems, like, good days might not be very far behind. I think the 50 EMA is also showing weak positive range, so ignore. Just like oil and gas, energy is also not looking very positive, so we'll move on. Media sector, I don't trust. I think it's very volatile, very high risk. We don't want to participate there. PSC sector is very I do want the sector to go above the 250, the sector index to go above the 250 EMA before I take any position in the sector. So that's that about Nifty indices. With that, we come to the end of today's Market Outlook series. I hope you found my discussion, my analysis, and my demonstration useful. If you did, please drop me a comment. Um, Makes my day to read your positive comments. And I will see you again next week, uh, next weekend sometime. I'm still kind of in recovery, so I don't want to commit to a particular day and a particular time because it's gonna take it easy. So I promise I will post a market outlook video, uh, but I cannot commit to a live session time. And I know a lot of you are also eager for me to start my stock query answering because you have so many questions. Unfortunately, right now I have very little bandwidth, so I'm not able to do that. But as I move along my recovery journey, I get back into 100% productivity state. I will definitely bring it back. Don't worry about it. Um, Thank you so much for listening in. I will see you in the next video. Do drop your comments and do join my Telegram channel. The link is in the description box below or in the comments below. You can find it there. So thank you so much for listening. Thank you for your time and attention. Until next time. Namaste.